big buy day. We finally get some clarification on everything going on. Let me bring it over to the SPY. We have been stuck underneath the trend line, sort of stroking resistance. Short-term trading, putting a lot on. We've been adding a lot. So let's go through sort of the whole week. Last Friday, we were putting long position, not long positions, but going long, right? We got a gap into Monday. Still didn't really get clarification whether or not we were going to be trending, consolidating. So we kept everything short-term, but we've continued to trade towards the upside, hedge our position during lunch if need be. Today was the first day we have not hedged during lunch, no puts or anything like that. So continue to trade long. Yesterday's candle was a little bit giving hints and possibilities that we may not be trending as much, that we were going to get stuck underneath resistance, and then today's action came through, and we really got everything we needed to see in terms of clarification, with sort of this risk involved with the dollar because the dollar is breaking out, but volatility has dropped to very low levels, right? And so melting up through the entire day didn't lead to any sort of pullback at close. We were on top of a trend line back in this channel. This is a lot of bid at close. That's 26 basis points for that 15-minute candle there. That's, those are the megas. We put megas on. We just put megas on, right? We just put megas on, and those are going to be looking very good tomorrow. So in terms of today, let's just take a look through some of the positions. We got big ups on the Veru chart. I mean, again, from open, right? This could get interesting tomorrow because we've done this every day now. This is the fourth day in a row now that we've had charts that are putting serious numbers on that they're not like hype based or anything, right? They're just purely technical. AVXL, right? We got the gap here. We traded this. We've been trading this for the last 2 days, right? From the breakout, you can't even see it on the chart now, but from this break here, been trading it. We got the gap here today and a very large push up to the top. Of course, somewhere in this candle, you're taking profit, right? That's 24% right there. Somewhere in there, you're taking profit. We were looking for new entries, looking, never really came. Still, this is a great trade. It's nice when you get a win like that, right? BCLI coming off from the open as well. Again, these are all, I'm just reiterating what we went over today. We got this from open, from the break. I mean, again, you're getting moves that are not, it's such a large move comparatively that the relative move is so easy to see, right? And these are the ones that stick out. The skills chart with the gap, we've been trading this. This has not been something new, right? Yes, you're getting some a little bit of luck in terms of the gap here, but again, it was a great trade to begin with in terms of trading, and then you gapped over the supply. It's a great win to get there. The goose trade, we were talking about retail stores, not retail traders, retail stores doing well. We were not in this trade. We've been trading other retail stores, but what we did was we entered it open. We entered it open because sort of a motto coming into today was on any gaps, we need to be mindful that you can still enter after the gap, right? This is a large gap, but take a look. From open, we entered, and we transitioned out of it. That's a great trade to still make, because taking the trade here and then being able to transition or sell out over here is still a large percentage, right? Still a large percentage. There's a couple other trades that are very similar to that. The apps trade, right? If you weren't in apps, you could have traded it from open today, that pullback up to the top. FUV, we continue. Let's see. XERS, I was going to say we're getting very close to the target already. This is a great trade to continue to push. WKHS has been a great trade to continue to push. We put another 15% on today. See a couple other charts that are important. Free Willy, SeaWorld. I mean, again, that silly word that everyone gets triggered by. Not triggered. There's like maybe 2 people that get triggered. What a silly trade, right? This is a great trade. There's purely technical, right? This isn't like a Reddit retail, let's make SeaWorld worth something when it's not. It's just purely technical, right, between the trend lines. NPA was a great trade as well here, from support up to resistance today. Big moves. Bison, I talked about from yesterday, the break, and then today we continued it. It looked like we were actually about to go. Not enough demand. but very close, very close. There was a couple other very big positions in terms of things I saw you guys mentioning. Fiverr, PRTS, of course, we've constantly been trading. Let's see, PayPal, we've been talking about a lot. We got the gap here today. This continues. Again, you don't take profit on this. It's something you continue to push. We've been talking about this with Square Inc. for a few days now. Looks very good. Brian just mentioned Peloton. We talked about Peloton today. What do we got? Get 150.5. I've got no shame in holding that position. That's for sure. Got no problem with holding that. We'll see where that opens at. Comes into open. Interesting move there. But again, purely technical. You can't go, okay, well, let me just get out of this up here because this is certainly the top. You've got no idea. So anybody in that trade, I would not be worried. And again, this is, I just quickly sketched this earlier in terms of a consolidation. You are in some sort of consolidation. So again, it's not like you're full breakout territory or anything like that. I think that's all we need to mention. Oh, and then banks again. Banks with a continued breakout. Again, you can't be missing this type of trade because this has been a straightforward trade in terms of value. Again, we knew that this move was coming, and then this is where money was going to go. Flows were going to go into value. Brian's mentioning pins, and I'm going to do a little bit of an overview. Where's pins at? The old pin to rest, 86, 87. It's a pretty nice move. Again, earnings is just a mess. Everything's all over the place. I don't really care too much about earnings. Let's see, real quick. Let's get through some of the macros. Let's take a look at the dollar. So this is the biggest story again of the week. What's going to happen with the dollar? Now we've broken out on the dollar. Now we're not correlated with the dollar right now. Equity market's not fully correlated. So the dollar going up is not causing the equity market to go down, right? We obviously can see that, and we actually know that some of this is other currencies converting to the dollar to buy U.S. equities. So we don't have too much fear from here, and we know that's the case because volatility itself. Look at how much volatility's come down. It's doing its usual move. After a spike, comes back down. It's sitting in sort of the COVID risk area, right? We know there's more risk than Spot VIX is telling us, right? So we're still prepared for an upside move. It's very easy just to pick up one of the derivatives and sit in the position for the chance that it's going to go to the upside because again, the underlying move based on the other delta, based on the derivatives deltas, allow you to just sit in the position, not really get hurt on the options while you sit in the long position for the chance when it does pop back up. Again, it's a good sort of protective trade, not so much a hedge, but a trade that coincides with some of these other long trades, especially if you're trading on a more short-term schedule like we've been doing. So volatility really coming down. This is going to set up an interesting day tomorrow. The reason why I kept talking about gaps in chat today, Asia was bearish last week, has sort of recovered at the beginning of this week. It was down today. Europe was mixed today. That should set up a pretty good pre-market for tomorrow since we also are pushing towards all-time. Everything looks a little bit better. Volatility's down. This should set up a mood in the morning that is going to be bid. Fridays are usually bid. It's going to be interesting because if you gap, let's say you put 1% on pre-market, what's going to happen then? Do we take profit from open, right? Do you take profit from open because you gapped up, or do you continue to push? It's really not clear, and it would really depend on where the money's going. But everything's trending together, which is going to be interesting. And the other thing is the dollar, right? The dollar being up. How do other equity markets react towards the dollar being more expensive now? That's really a big question. But if the dollar is breaking out here and we're doing fine in the equity market, if this comes down at all, then that could signal a lot of buying, right? It could signal a lot of buying if this does not continue. I would have to imagine this move's going to get consolidated a little bit, and you're not going to continue into tomorrow. So that could really turn into a lot of bid, which come 9:30, we could be opening up 1% higher across the market, right? And so those sort of situations are interesting to think about. If we just take a look at some of the other charts, you look at some of the mega caps, some of them really didn't move much today, right? You look at across the board, some of these didn't really even move. And so this, again, is because there's not much volatility in the market. But I mean, you know there's some points that can be recovered. Apple is significantly behind, significantly behind. You know that there's some points that can get recovered. So, you know, it should be a really fun, interesting Friday. And I mean, it's been a very good week so far. Looks like Snap's getting beat to hell. What's it down to? 12%. Again, a reversal from here from the top. There's some interesting selling here today from when we were looking at it earlier. Where are we? Here's from yesterday into today's open. Some pretty big candles in there. Some big candles in there. Unfortunate in terms of the technical side. You've got this really nice break that turns into sort of a very quick reversal up here. Looks like preemptive institution selling. This is where I talked about Twitter. What did I say this morning about Twitter and Snap? If Twitter's breaking through this trend line, it's going to take away from Snap's demand, right? And so we're going to take the Snap profits and put them into Twitter. That was a thing coming into today's open that we talked about because it's exactly what just happened, right? As soon as this starts to get through, the demand comes from Snap. Here it is, right? It's just one of those flow situations. It's sort of like the Etsy and Peloton flows that we watch and see happen. This is again. This is a good example of confirmation of the idea we had from open. If the demand goes into Twitter, right, then it's coming from here, and it certainly did. And this is some interesting action here. I feel like that's not going to be holding that much because you do have a pretty bullish outlook, I would say, on this chart. So we'll see how that looks tomorrow. Again, we are looking hot. Tomorrow is going to certainly be back to our heavily favored charts of clean energy, EVs, value in general with banks, travel, REITs. Those are all going to look great tomorrow. The question mark is still in terms of volatility for mega caps, how much gets over there. But if everyone wants to get into an all-time high situation, institutions are going to need to utilize mega cap liquidity. So we've been sitting in that mega cap position. We talked about it 2 days in a row now to put some of those on. And again, that's just to get exposure in terms of volatility being low, but we know it's a little bit higher just in case of a volatility event coming in. That's another way to sort of, you're not hedging because you're going long, but you're getting a trade that sort of helps support your longer ideas of value being the main winner, right? And so these are going to be interesting. So in terms of SPY, a lot of us are sitting on the SPY 400s, the Februaries, which, I mean, look at it now, right? Where's the 19th? Here's the 19th. Here's 400. You're not too far. You're not too far, right? 3.5%. 3.5% is nothing. Is nothing. That's where we were talking over here. If this continued, we're right back in it. So all of this, all it was time, right? We lost time. This has been handled well. There's a few things to think about, and that's again going to be this whole gamma situation with the this underlying chart being the derivative of the options. We know there's a lot of options buying. This move here is entirely correlated to the fact that options are getting more heavily purchased. MMs are buying the underlying. This is getting pushed through supply. That's why today looks so different, right? And we talked about it. We were looking at a lot of these charts and we could see it. You can see that trend. That is, you can just tell it's not just normal back and forth trading where it's 50-50 most of the time. You could tell that it's some sort of market makers, institutions that are buying on schedules. And I talked about a little bit in terms of intervals. They buy on a schedule. You can see it in the book. They're just putting that delta neutral position against the calls, right? It can only get more. That's what all this buying at the end of the day most likely is in relation to. Now, we're seeing a little bit more in close. I think you'll see a little bit more in pre-market. Again, it will completely depend on what Asia is going to do, and I would have to imagine they're going to be bullish tomorrow, unless Asia is more tech-based. Excuse me. So it's possible with low volatility they don't get as much points on, but Europe is value, so they should do well tomorrow. London should do better. London being more aggressive, doing break even today should definitely put points on. But otherwise, yeah, I don't have much to say. We talked about a lot. I'm going to go over let's go over some of the profits in here. Maybe we can switch the screen too. Let's take a look at what the boys have in the chat. Here we are. Mobsky with a break-even day. That's okay. We'll take that, put it in there. Tiger Shark with the 5%er. Okay. Broke the 21K wall. I like that. Met with the 21%. Glizzy, Brian with the 48 slow day for Glizzbone. Okay. Spoon with 7%. Nice. David, 350. We like it. Those are good numbers. Those are good numbers for a day like today. McKee just mentioned earlier, 100% on the few of the IWM calls. Obviously, the most looked at chart that we look at in terms of value, small caps. We've done we made a killing, right? Made an absolute killing here. I mean, let's just be honest. This has been the chart, right? That is the chart. So good numbers, guys. Good numbers, guys. Let me switch it back here. We're going to talk a little bit about volatility. Got brought up unless anyone else has any questions. Again, we've gone over everything in terms of going into tomorrow. It should be a bid Friday. We're going to need to see exactly how we're going to manage positions going into next week. But a lot of this does look like we're going to be able to push into next week, right? It does look like we're going to be able to push into next week. And so we've gone from sort of this short-term day trade because of risk reasons coming out of the reversal into, well, we're going to push these fucking positions and put some serious points on. We bought the SPY 400s down here, right? We got like a 20 cent cost basis on the SPY 400s. And yeah, we were joking a little bit and not going full in. And we never went 100% cash on this move. It wasn't like the Georgia runoff, 100% cash into the move. It wasn't like back over here, 100% cash into the move. You know, we're sort of tiptoeing, but we're getting there now where we are getting up to almost 100% into the market now, right? Over these days. So it's pretty damn close. And again, I mean, look at the top of the list. Again, there's like 100 charts that were over 5%, 4% at least. I mean, that we're actively watching and, you know, getting spammed in chat the whole fucking day, right? So the opportunities are there every day. So it's about just consistently getting those gains on each of those charts. And they're there. And tomorrow's going to be no different, I would say. Should be more. And we did get confirmation of some intraday movement here today comparatively to yesterday. So pretty exciting stuff. And, you know, the fact is that there's still so many risk. There's a lot of risk in the market with a low spot VIX. So we're sort of in a perfect situation where you've got high implied volatility but low overall risk in the market. So you're sort of just fear buying on something that apparently no one sees the fear in. So you get pretty much free points and no risk on your entries. And again, that's where opportunity cost comes in, where you need to be putting your money in the place that you can get the highest exponential, right? And that's why we're just fighting over scraps on the table right now, right? I mean, if you're doing the same trade as everyone else, then you're not going to be making money, right? Either way, that's all I got for today. So in terms of the review, let's go over the volatility question. I think it's an interesting idea to go over since we talked so much about volatility. Let me find where's Wiz's question. Wiz had just asked about in terms of the volatility chart, since they always are trending down, right? They're always trending down overall. Just from over time, they trend down, right? Further and further and further. And so this is, again, you can look this shit up on your own, right? You can look this shit up on your own, but I'll talk about it a little bit. So in terms of the volatility ETFs and ETNs, you know, the idea of contagion, which everyone knows about, retail and most threads you see talk about it as a decay, right? Well, what about the decay, right? And so on any of the volatility derivatives that come from the spot VIX, right? They're just going off of the futures as well, and they're going short term, different lengths of time. And the contagion, which is this idea of decay, that over time it's always going to trend down. It's because the process in which, so this is the ETF, UVXY is an ETF. It's putting on new contracts, it's putting on new futures every month, right? So based on the expiration, let's say it's September, it goes from September to the next month, and then the Septembers get removed. And so this sort of, where are we right now? It's February, right? So the February futures are on right now, and it's priced based on those February futures. And so the short terms go month to month, and so next will be the March futures. Now, just like with everything, prices generally are increasing, right? Your favorite meme of stonks only go up, right? So, 70, 80% of the time, these futures are more expensive. And so since they're more expensive, for the actual ETF or ETN to put that new future on, add it. They have to actually add it into, just like a regular ETF, right? They benchmark against the actual stocks, and that's why the ETFs are usually going up against the stocks. If they're going up, SPY's going up because S&P companies are going up. When they put that new future on, it costs more than the previous month, right? And so because that cost basis is higher, it actually pushes us down because, again, supply and demand and price, the benchmark costs more. And so the overall is going down through this idea of contagion. And so because of that, it's always getting more expensive for the ETF or ETN, so it goes down. That's an overall long-term situation that you do need to be aware of, which is why you can't hold this over time and why it's a short-term trade. And when I talked about it over here, the reason why we bought this on the Thursday to Friday before is for the same idea. It's not that you can't go put a consolidation idea don't you see it's consolidating in here and it's tightening, right? It's not an equity. It's not like a stock idea where, okay, this company is tightening, the candles are tightening, so we're expecting a move up. That's not what it is, right? This is honestly just happening because you're getting the new future put on, right? And there's an expectation that the next future is going to cost more, so the price is coming down. This is not. We shouldn't even really use price, but I mean that's what it is. Of course, it's price, but it's more of a value. It's like a value point, just like the VIX is a sort of a value that comes derived from the near-term S&P future contracts, right? Now, there's times when there's backwardation instead, and that would be sort of it's the exact opposite of contagion. That's where the futures are going to be cheaper, and so due to the futures being cheaper into the future, and a speculation that the futures are going to be cheaper, it will actually affect the price in such a way that you're going to get something more like this, right? This is instead of decaying down, you've got this sort of ramping up, which volatility does not do, right? Volatility does not ramp up. This is why this is backwardation. We also had it over here. We had a little bit of that in this area where it's not really pulling back that much. It actually sort of remained level. We had some of that a few times where there wasn't actual risk events. It was actually this backwardation idea. I think May is probably a good example because it wasn't until June that we actually had more idea. And so over there, that's a lot of backwardation. Over here in August, I remember as well. I think we talked about it a little bit. This is not a volatility event being caused, right? Volatility events are obvious, right? They're obvious when they're happening, but this trending that you see, that's actually the opposite of contagion happening. That's the futures. That's the version of contagion that's opposite, where backwardation, and you're thinking that futures are going to be cheaper, so you're actually thinking that volatility is going to be lower. Overall, we always expect volatility to be higher, right? You just always expect volatility to be higher than where you're currently in. That's just. You never know. The further in the future you go, the less of an idea you actually have of price, right? That's this whole idea, and that's why this actually it seems backwards, but that's because it is backwards. It's tracking the actual futures contracts, and so because of that, it's going down. So it may seem backwards, but that's why it spikes when a volatility event actually happens, right? And so when we see volatility, there's a reason why it reacts, and there's a reason why there's a lag to it. Because you have this constant decay that's waiting for volatility, and all it's doing is benchmarking to it, right? It's just benchmarking to it. there's no way to push this price or something, right? You can't, even though this is the algo's playground on UVixy, you can't go push this price. This can't be pushed. What can happen, and what I talk about a lot, which is going to be like the important part of why this chart doesn't really matter when you look at it, it's the options that trade on this chart that matter. So you're going into the next derivative. It's the options on this chart that actually affect the overall risk, which is why I've been talking about, yeah, these values may be down here, but if you go look at the options, there's a lot more bets that volatility is going up than down right now, right? And that's where this doesn't actually help, because it's just benchmarked against this is benchmarked against VIX, which is then benchmarked against the S&P futures. And so the important thing here is that we look at the options, which again, we know that the underlyings are just the derivatives of the options, because the options are where the bets are. And the story I always tell, the bets are actually affecting the outcome, right? If we bet that for Mobsky to eat 100 chicken nuggets, we say, Mobsky, listen, man, if you can eat 100 chicken nuggets, you can get, half of all the bets that were in your favor. So if we're all going to bet on if Mobsky can eat 100 chicken nuggets in like 10 minutes or something, let's say, it's 50-50. Half of us bet that he can, half of us bet that he can't. Well, half of the bets will go to Mobsky if he's able to do it. And so because we're betting that he can eat all those fucking chicken nuggets, he's going to start eating more chicken nuggets, because he's like, damn, if I start eating these faster, they're going to start betting on me even more, which means I'm going to get more money. And so through the process of betting and the fact that it shares, that underlying shares with the bet, which would be Mobsky getting paid for eating chicken nuggets, the guy is going to start eating more, right? And this is something that you see on trade floors at institutions and banks, is that you have these on Fridays. Fridays are generally slower days for institutions, like on a trading floor, because you've gone through the whole week, you've made your trades. You're really not going to do much at lunch and going into close on a Friday. Like if you're a trader, you're just not. It's just a reality. And so you have these days where you have these dumb fucking competitions, like drinking a gallon of milk, eating chicken nuggets, like I said. There's a few other dumb races and shit that will be done. There's different games, and there'll be bets on them, and you can bet on people doing this shit. And this is always the factor that comes from it, is that it depends on how many people are betting. You don't want to do something stupid if other people are not going to find it entertaining, and if there's not any money involved, right? And so the more people and the more money involved, the more likely you are going to do something fucking stupid, right? And so if it's a slow day, you want to call your buddies up from another bank, another fund, be like, hey, listen, Mark is going to be doing a gallon challenge of drinking milk in an hour. Do you want to bet on him being able to do it? And this sort of thing spirals into this whole fucking dynamic, right? And so this whole idea, though, is happening here, right? It's happening here. And so, it's important to continue to understand the way that the bets are here and you're not seeing them. And this is where you need to get into the option chains and see what's going on. Sort of like over here, right? You start to see it, and then that gamma idea of that acceleration of those options is going to cause market makers to be buying that underlying because you're betting on it, right? Just because you're betting on it. And it's going to cause everyone else now to go one way. And again, this is where we are in terms of market, which is why this strategy has paid off so well in terms of following trends. And you know what? The dollar is continuing here, boys. It's going to be very interesting. Very interested to see what's going to happen. I was expecting this to come down after close. It's just holding value. That's going to be interesting. We're going to see. We are going to see. In terms of charts for tonight, thankfully we have for almost everything that I saw break out, we have a chart for pretty recently. I think there's going to be a few charts I'm going to need to update tonight, so I'll definitely do those. I'm trying to think specifically if there's anything. We have charts like this, right? Like Upwork, that's breaking through these macro trend lines that you're sort of in a whole new chart. Some of these are going to need to be thought about in terms of where exactly are we going. I talked about a couple days ago, I like the DocuSign chart, but it's not entirely there yet. This is like a long-term diamond, right? You get this whole uptrend and then you get this diamond consolidation, but I don't really want to chart a long-term like that. That's like 150 days or something. So if we can get something more short-term here, I'll be able to chart it, put it on in terms of tracking velocity there, because a lot of those charts are, there's just too much going on. I like the ELY chart I've been talking about. It just, these charts that continue to trend. So there's a lot of charts that you're just not going to get a new pattern for, right? There's just not a new pattern for it. And so those charts, maybe if you want levels and stuff, continue to ask for them, and I'll put them out there. So I would just say throw a bunch of tickers into chat for charts that you want levels for tomorrow, because again, you need to be planning tonight what you're going to be doing with positions based on if we gap up, if we have a situation where there's significant bid from open, but we open level, if there's take profit at close, how do you want to go into next week? Do you want to have trades over the weekend that are longer expiration so that you can push them over the weekend in case on Monday you open up a little bit lower, right? So if you have short terms, you're going to get fucked on Monday open if you have short terms, but if you have a little bit longer term and Monday opens lower, you're probably going to be fine, right? Because speculation still leads to further upside later. And so some of these things you're going to want to figure out based on where your levels are. So if you have support, like let's say you're 5% up on your position on the underlying and your support's like 2.5% below you, that's probably an okay position to still push, because you're like, well, I've got support here, and that still would only be a relative point on my chart. I'd be fine there. And so some of these are going to matter for tomorrow. And again, I think I'm at 40 positions or so right now. And so, how many of those do I really want to be a part of going through? Like some of these charts are great, right? Like the Twitter chart here today. Some of these charts are fresh, continued trends that, again, are, there's really not much to it other than just pushing. You don't need to think about it. Overthinking some of these charts is probably not the best idea. I think Lyft, Uber, like these did not get mentioned very much today, but the Lyft chart broke. Uber's sitting here. Some of these charts, like Uber, is going to catch up to Lyft. How are these coinciding? Some of these are important based on levels of how you're going to trade these. So I think I would really do a deep dive into tomorrow, because again, going to all-time highs, it pulls everything. Everything's going to go, and if you miss some charts, like if you miss the entries on some charts, and this is again where, the style we use this week really put us in a position where we missed some different things, missed some long positions, then you don't want to be chasing charts. You can find the charts that are they're lagging, but they're going to catch up, and so you can capture that move instead, right? It's probably going to make the same size move, right? Probably make the same move. So those are charts to be looking for. Maybe I'll put some of those out. What was the chart today that we had the horizontal in the trend line and it broke through? I'm trying to remember. What the hell was that chart? Yeah, those of you heading out here, obviously have a great night. I'll see you in the morning. Watch out for charts tonight. What was that chart we were looking at, guys? Chewy? Was it that one? Yeah, it's Chewy, right? So this chart, for instance, right? You've got the trend line and the horizontal. You're right there. This is one of those charts that tomorrow you have to expect that if the market's up, that this was enough, right? Let me see what's it got after hours. It's at 106.70. So you're right on the support. You have to expect. So when we were talking about it over here, you have to expect with a bid day tomorrow that this is going to put some serious points on, right? Now it doesn't have to. We're just playing probability, but the way that price broke through a trend and the horizontal here, you gotta take that if it's there. Now you can wait till tomorrow, right? Like you should not be putting a full position on here without the breakout. But I'm saying for tomorrow, understand where this level is, right? You're on support here. This for open is probably a great one. So we're gonna be looking for that. There's charts that are in this spot where they didn't move, but they're certainly ready. And obviously the charts that I just recently posted are important. Look at the points we put on today on all of the charts from last night. Some very straightforward entries, right? Some very straightforward entries. let's see. What's Ecto saying here? Don, I know how you feel getting tired talking to us all day. Doing that for the day job, training someone, and it's fucking exhausting. See? There you go. Good one. Good one. Yeah, that's it, boys. That's it. I will see you guys in the morning. But again, these recent charts, please, continue looking at the recent charts that we put on. These are all doing significantly better than some of the charts from earlier, because again, we're in this short-term sort of space, and so we want to be capturing the most recent moves. These have been easy trades. So look for those for tomorrow. Have a great night. I'll see you in the morning. And until then, enjoy.